Good morning, everybody. Welcome to the Flow Show, and a wild start to the week already with the goings on in Japan and elsewhere, which we'll get stuck into shortly. Morning, Kay. How are you doing? All ready for the week? Hello, hello. Is he there? Are you there, Sydney? Are you on mute? I think you're on mute, Kay. Okay, maybe Kay's having some gremlins this morning. I'll wait for him to sort his wires out, perhaps. Let's get stuck into the news while we wait for him. Over in China, apparently gold demand has plunged on the back of all these high prices because it's apparently got jewellery buyers sitting on their hands a bit, prices going too high for that. So if that's something that spreads to many other countries, particularly countries like India, then that's going to be potentially a signal for a top in gold. If demand drops, then the price is likely to drop behind it. Of course, we know that there's a lot of central banks buying gold, so they're not buying that to sell on as jewellery. I can tell you that. So that's something we need to keep an eye on. Kay, you back? Nope. No, I did see him flick on and flick off. Not sure what's happening. I might have to go and find him in a minute. Okay, moving on. Japan. So we had the election this weekend, and it couldn't have gone much worse for Ishiba. He lost his majority. Was widely expected that he would do so, but he did so anyway. And not only did he lose seats, or his party lost seats, but the coalition that he was in with lost seats as well. So it was not just a question of them, it was all the main coalition parties or leading parties that lost seats in that. So he ended up, or his LDP party ended up with 191 seats versus 247 previously. The closest party to that was the opposition party, the CDP, which gained 148 seats, up 50 seats over their prior reading. How it finished in total was that the old coalition finished up with 215 seats versus 279 previously. So a big loss there. Opposition parties now account for the majority, all added together, 235. Kay, yeah, I can see you there in the comments, mate. Are you back on sound?
Testing. You hear me?
Yeah, got you now.
All right. Hey, good morning, everybody. Morning, Ryan. Please proceed.
Yeah, no worries, mate. Now, Ishiba has said that he is going to stay on. He's ruled out a broad coalition, so inviting even more parties to a coalition. So that leaves things in a bit of a mess. Now, he can rule without a majority, but obviously that makes it very difficult to pass anything through Parliament if you don't have a majority. The official ruling now is that they have 30 days to cobble together a government, but it seems like they've set November 11th date for a special parliamentary session. That's where we're at the moment. I'm not entirely sure how it all works over there, whether there can be sort of votes or no confidence votes now put in Ishiba, whether he will be forced to stand down and they have to go through another leadership election and what goes on for there. Kay, do you know the ins and outs of this one? Is it going to be like a UK election where it has to go to another vote, or what happens?
I don't think to another vote. They are going to try to form a government, but it depends who is willing to get in there. I think so. That is where I am at least, unless somebody else has a different insight on it. But I think it's talks between certain parties. But we've already seen that they don't want to work with certain of those parties. So I wouldn't think there is a second vote coming unless something in the rules that I don't know about it.
Okay, thank you very much, mate. So we're in a bit of limbo with that at the moment. So we're going to be listening to a lot of political spinning going on, no doubt. Deals being struck, horse trading, and the like. Where does that all leave the Bank of Japan, mate? Because the market's really, most of the market's really looking at this from the BOJ aspect. Obviously, they're not political, but they at least want a solid political background behind them. So, what does it put them on an extended hold, perhaps?
It all depends who the ex-ruling party can go and see with. If some of the parties are more hardline and other ones are softer liners, so that is something that should show itself pretty soon, because we know that the Bank of Japan is shouting its independence from the rooftops, but we also know that for 25, 30, 40 years, that independence has been pretty relative. So it depends on the timing. If they succeed to pretty rapidly form some kind of a well-functioning government, it should not change too much. But the longer it takes, the more Bank of Japan could feel a bit trapped. But so far, independence, and I have not heard from Ueda or anyone else, unless I missed it. I haven't heard from them coming out saying business as usual. So that perhaps will take a couple of, or actually will take the meeting to sort itself out.
Yeah, and obviously got the Bank of Japan meeting coming up soon as well. Maybe
Friday.
we'll get some sources
Thursday.
pieces or something dropping off. What's that, mate?
Thursday.
Yeah. So we might get a couple of sources things dropping between then, in addition to the ones we had last week. But yeah, so we'll get their thoughts on all that later on this week anyway. Right, moving on to other news. Over at ECB land, ECB's Nagel, the German ECB member, says he's seeing increasing restrictions to global trade. Says Germany is not expecting a deep contraction, but we must prevent that if it worsens. Not sure about that, because there's news from Volkswagen. The Labour chief said they're seeking to close at least 3 German plants and downsize all remaining German plants. One of the big German car makers there planning to do that. So Nagel's deep contraction may be a bit more of reality than he thinks. Anyway, he says we shouldn't be too hasty in mulling the next ECB cuts. ECB's Vasile says that they are approaching the top of the range for the neutral rate and that officials shouldn't rush to cut rates. ECB's Wunsch, no urgency for the ECB to speed up policy easing. So it still remains a case that we're pretty far away from seeing a 50 pip cut from the ECB. But we're getting into neutral rate territory where they're all going to be checking their seaweed and making their guesses where that neutral rate is, and then if they can actually stop there. A bit of data from Friday in the US. We had durable goods orders, which came in a green number just because it wasn't as bad as expected, although some of the core durable goods orders were improved. So they came in at 0.4% over the minus 0.1 expected. This is another sort of core measure as well that came in better at 0.5%. Canada retail sales were a little bit sucky. Retail sales came in up 0.4%, missing expectations. Core retail sales, though, came in minus 0.7%. That's the number excluding autos. StatsCan had predicted this number to be up 0.5%, so that was a slight miss there. They predict a flash number for September of up 0.4% for next month. Michigan numbers came in, a bit of an improvement on pretty much all the numbers there. The big news, though, really was, well, say big news, was a one-year inflation coming in at 2.7%. Don't know why this has got this as 2.7% because I believe the prior number was 2.9%. I'm not sure about that, but anyway, came in softer than was expected in the prior number, so that's a bit of help for the Fed in terms of expectations. The 5-year came in unchanged over the flash at 3%. BOC's Macklem popped up again on Friday, said we're still not close to the limit of divergence with the US, and that divergence is not a factor in rate decisions yet. So just raising that subject of how far and fast they cut versus the Fed. It's NFP week, and everyone is going to be jumping up and down trying to guess the number as usual, and I'll have the contest up at some point this week. But Reuters picked up some government data saying that striking Boeing factory workers could take off 33,000 jobs from Friday's number. They also cited that a total of 41,400 workers were on strike in October. That includes Boeing, Textron, and 3 major hotel chains. So everyone's going to be doing the weather and striking guessing to this, so just going to add a bit of spice to Friday's number. Elon Musk might be eyeing up a job at the Treasury Department. He thinks they can cut $2 trillion from the US's government's annual spending. I haven't read into the details. I'm not that interested in the details, but that's what Musk can do anyway, and he's obviously a big backer of Trump. Right, now over the weekend, Israel made their attack on Iran, let's call it that, but they supposedly kept their attack limited to military targets and stuff like that. Iran has obviously responded, saying that their response to Israel will correspond to the attack. So the retaliation for the retaliation for the retaliation is going to be retaliated in some format. If all the prior headlines are to be believed, the fact that Israel kept their attack limited to military targets should, touch wood, and hopefully lessen the impact or retaliation from Iran. Again, we might be in a situation where, okay, you've done your bit, we're going to talk about it, and then maybe things quieten down a bit. Still doesn't resolve the other ongoing stuff in Lebanon and Gaza, but let's see if it develops into something better. Now, this is a bit of a strange headline from the US, because they've moved some F-16 fighters over to the Gulf, and they have said they're going to offer defensive assurances to Saudi Arabia if Iran attacks. And the reason that's a strange headline is because Saudi Arabia and Iran have last week completed joint military naval exercises. So they seem to be getting on, but the US feels like they need to offer defense to Saudi Arabia if Iran attacks. It's all a bit strange. The headlines coming out from there. In other news, Lagarde apparently is going to host dinners with ECB officials before most meetings, part of starting up discussions about monetary policy earlier than meetings. So their meetings start on a Wednesday morning, 2-day meetings, a bit like some of the other central banks, but apparently she's going to host dinners for those officials before those meetings. So if anything, that may open up the door for some sources pieces dropping after everyone's drunk on champagne and caviar, and they fall out into their taxis and catch a reporter sitting on the doorstep. Who knows? We shall see. That's all I have on the headline front. Kay, anything from you, mate?
Not much more. Only there was a bit of an interview again with Orr. At least it's been produced over the weekend, and he was talking about how dependent they were on China, how gradual they wanted to continue with cutting the rates. They are happy about the that core inflation has been declining, but it didn't really give much more. I'm looking for a reason why Kiwi is a bit lagging compared to the rest. I think there's still a lot of China because he did say or repeated or we did say for confirmation that China is about 30% of their trade. So they are going to need a revival of the Chinese economy as well. So that was the only other thing that I've seen coming out of the weekend, which is probably worth mentioning. No, for the rest, no, I think we have covered most of it. On the ECB thing, they had those kind of dinners before, but then they canceled them. I'm not, I don't know whether it's like really that important, but as you say, there may be now sources pieces coming out or doorstep comments of participants that been caught by reporters. That's possible as well. Or perhaps we will have more comments from De Guindos, you know. Perhaps he was. They were complaining about him being quiet over the press conferences. Perhaps still being hungover from the day before dinner.
Yeah, or maybe he's going to be Toastmaster at these dinners. Who knows? Anything that gets him speaking a bit more. Yeah. So anyway, let's have a look at what's going on and have a look what's coming up this week before we start looking at the prices. So a reasonably busy week. Obviously, we've got the Bank of Japan. We've got non-farm payrolls. Today, it's a bit quiet. Just some regional data from the US. Kiwi jobs later on this evening. Tomorrow, oh, I've got a sneeze. Excuse me. Let's hope that doesn't come in threes. Tomorrow picks up a bit. We'll get some inventory data from the US, house prices, and the Conference Board consumer confidence, which will be fairly important for what's going on at the Fed. And obviously, JOLTS coming out as well tomorrow. So we'll see how that data's turning around. Everyone will be looking at all these jobs data to get to understand what may happen or try and guess what happens on Friday's NFP. On Wednesday, we get some flash GDP numbers, start getting the Q3 data coming through. We'll see how bad things are in Europe. ADP employment obviously gives us our first look at a jobs guess ahead of that NFP. It's also regional CPI data in Germany as well, which will culminate in that number there. And I haven't adjusted this calendar, by the way. I just realised for the clock change, so all these times are going to be an hour earlier than it says here. A bit of home sales data in the afternoon on Wednesday from the US pending home sales. Thursday, we get some data at Japan retail sales, industrial production, then the Bank of Japan announcement. I take it you're not going to be up for that one, Kay?
Well, it should be plain. It should be simple. They should not move anything. They have been hinting themselves or at not moving anything. So I may pass on that one for once.
Yeah, I'm definitely passing on that one. Then we get German retail sales as well later on, and then the some flash Eurozone inflation numbers, and we get the headline Eurozone inflation flash later on. Challenger layoffs, one that I tend to keep an eye on just to see how job cuts are progressing, see if they're picking up, and we're seeing a higher and higher trend. They have been ticking up recently, 60s, 70s, 80,000s. We'll see if that increases as well. Jobless claims, which has got the market moving, but it's not going to have much impact on the NFP because it's not for the survey week of the NFP. But still, the market might decide to have a little jump around about that. We got personal income and outlays, which is one we'll need to keep an eye on, the good old PCE data. So that'll be interesting to watch for the inflation aspect, given what we had from the CPI data, which was a drop in the headline, but stickiness still in the core number. Then later on, after that, the old Chicago PMI, the old favourite one that comes out to subscribers 2 minutes before the rest of us. So if it's a big mover, you'll see that. Keep watching dollar yen and the like 2 minutes before that number drops. On Friday, bit of data out of China. Then we start getting some of the final PMI's manufacturing numbers anyway. Then we get the NFP and we get the ISM number as well, manufacturing ISM from the US. So that will be some big data there to finish us off. Okay, anything out of that lot you're going to be eyeing up specifically?
Well, the job numbers, the job data are always very important these days. Those are going to be the main ones that I'm going to look at. The issue that we have this week with the data, obviously they will be movers, and they actually could be a bit wild if they beat or miss by quite a bit, because the main players in the market may already be looking at the elections. And so I think the impact may be limited in time, but relatively big in amplitude of markets, because there's not a lot of people going to want to stand in front of too many moves before we get the elections next week.
Yeah, no, I can agree with that. And it's going to be a funny number. It's going to be a volatile number because we had that big beat last month, 254,000. Consensus coming in much lower than that. We've obviously got the weather impact that we saw in the jobless claims coming into that as well. And then we got everyone looking at these strikes. So the lottery number is going to be a bit spicier because, you know, if we get another big number after everyone's expecting a softer number, it's going to see the dollar really rip and yields rip again. Or if it's worse, then you probably got to think that the market's expecting that and it's going to throw a load of excuses at it. So it might not have the negative impact it would, you know, at any other time. So just know what the market's doing leaning into it. Okay, it's expecting a softer number, expecting possible weather shenanigans and strike shenanigans as well. So it's going to be probably set for a more softer number than it is for a big upside beat. So that's probably where the biggest price risk lies if we do get another big beat. But as we know, that can all change between now and Friday. Right, let's get that off and have a look what's going on in markets. Well, we'll start obviously with dollar yen, which is having a bit of a pullback now. If we close the gap, for all you gap watchers, not that I give two monkeys about gaps. No, we haven't quite closed it yet, but it looks like we're on our way to anyway. So we finally managed to have a break up above the 61.8 of the 162 drop. So we've pushed through that, but we haven't held above it. Again, it's a bit of a level all on its own, going back, as you can see there, around at 153.40s. So even without the fib, it's a bit of level. We haven't held above there. And now we could be heading back towards 152, and we need to see how that performs, because it hasn't performed that great since we had the initial break above it. So it's not exactly becoming a number you can hang your hat on. We've had a few little nibbles around it, but it still might be a bit of a do or die level. If we hold a test here, then obviously that will solidify it, and then it's going to potentially keep this trend going. But as Kay mentioned, you know, we're getting well into the election sphere now, and the market may just be a bit hesitant to push things one way or another. So for this one, I'm still not really trading it. It's still too volatile for me. We're still well above 13% in the vols, and it's just too jumpy for me. I would still be inclined maybe to be a dip buyer, but not this close to the election, I think. Kay, your thoughts on this one at the moment?
Yeah, unless you want to play it from here until what, Wednesday, Thursday, and then and then call it a week and let the US elections take over, or the US data as well. Yeah, I'm seeing Angela say about the failure and the 3 drives. Yeah, those things are noted in the market. I do think it's a bit of a buy the rumor, sell the fact kind of thing, or buy the rumor, and take the profit on when the rumor comes through. You know, don't forget that we have been building up into this uncertainty. I wouldn't say from 140, but let's say from 147, 48 or so. The whole buildup was a bit of the risk as well that this election mishap for the LDP may happen. So I think it's kind of normal that we see some take profits as well because of what is to come. So whether it be technical or gap filling, well, I don't believe in gaps either. But yeah, I think the and I can show that in a minute. What's going to be relatively important if you are a Japanese is there's the weekly cloud comes in just around that 152, just below, and it's going to slowly creep up. So perhaps that is something, the weekly, that is something you see comes in right around that 152 right now. See right below there. Oops. Why don't we have the same
Hang
Oh yeah,
on.
yeah,
This,
yeah. We do
yeah.
have the same. We do have the same. Yeah, yeah, yeah. I was looking a bit too much left. If you move to the right, you see that weekly cloud comes in around 152, and that is something that we may keep an eye on because the Japanese do. We haven't invented anything on those in those Ishimokus or so, but the Japanese do. They watch it. We had a close above. That may be enough to keep it a bit beat there as well. If you want to rely on some levels beside just the horizontal lines at 152, for instance. There's a bit of a trend line as well coming in there.
Yeah, thanks, mate. Quick look at the euro, and that's fairly quiet at the moment. Oh, let's come in a bit. Something we can all see. What was interesting for me is that we opened fairly low Sunday night, and we had a little mooch down towards this old low, which is the August low, going back to there. And we just held that again, which is two things. A, it sort of reinforced this level again, but also it's just a bit of a protective step up for buyers off of this low. But we're not out the woods yet. We can't get above this 30 and these highs here at 40. So this is the near term levels you've got to be looking at, 108, 30, 40 at the moment. But we've made a move back into 108. We're holding up a little bit, but it's we definitely don't look like we're ready to just break this trend just yet. Although this move is slightly different to what we've seen before. We didn't have a double test of a support area, so that's suggesting maybe the tide is turning. But unless we start getting back above there and then back above 108.70, it's going to keep the downside pressure on that. I think we're going to be doing a lot of data work on this one at the moment. With all this data coming this week, so it could be a bit of a decider for the euro. If we're getting soft numbers out of inflation and some really crappy GDP prints, that's going to keep the pressure on, and maybe we're heading lower. So your boundaries for the moment: 107.60, 108.30, 40 in the close numbers, and then 108.70 above that. Not a lot else going on elsewhere. Dollar CAD. Still having a little mooch up. It's testing these high levels now. I need to zoom out a little bit. So we finally got above the 138.60s area that we were holding below previously, and now we're just putting in the test some of these old 139 levels. If we get through there, then obviously everyone's going to be screaming about looking at 140, and I wouldn't rule it out personally. It's looking fairly strong, this move here. If we get a double top against that high, which is sort of mid 139s, that could be a bit significant, but it doesn't look like it wants to stop just yet. So up into this high 139s, 140 will be a real big test. If we break there, then we could be really off to the races and a bit of a range break. And I don't have a lot until 142.65 on that one. Obviously, we're going to have maybe a few little stops and pauses along the way, 141s, but I'll start chucking those lines in if we start breaking above. But in terms of a range break, breaking 140 is potentially significant. It's potentially significant breaking this 138.60s level. So if you're looking to trade this on the short side, be careful. This is your level now. If we bounce off there, find that as acting as support, then that's going to cement this move and then give it another push higher. So I might have a look at this one if we get a retest and a hold at this 60s level to see what happens there. Gold. Yeah,
bit of a crashing slow motion for the Canadian dollar, I find. If you look not if you look at the longer term, it looks a little spiky, but if you look at it in the shorter, on the shorter term, and it does look like a slow motion crash. And there's actually not that much since we started to really move up. There hasn't been an extreme comeback, if you look at it. Okay, we had from 138s down to one mid low 137s, but that's it. The rest is pretty orderly going that way now for the Canadian dollar.
Yeah, very much so. And a big part of that has been obviously yields, US yields ticking up as well. That's doing a lot of driving of the dollar at the moment, and they just continue to keep creeping higher. Yields pretty much hit that 430 level, which has been a bit of a level previously. So that's where the price at least run into trouble when those yields hit that area. So I really don't know where this one stops. The higher it goes, the more tempting I get to try and go the other way. But I'm not going to do this before the election, definitely. But I think there's going to be a trade in here pretty soon after. Obviously, depending on the election outcome and what comes from that. But if you're looking at it purely from a interest rate perspective, these yields keep going higher. It's gonna put it at odds with the Fed, and that's something that's going to have to be resolved at some point, mate.
Yeah. The thing is here is I think that we are still going to be in a broader range, but they're pushing up for a couple of reasons, and it's no matter how you turn it, whether it's Trump or Harris coming up, the market will likely try to sell bonds or go for another leg perhaps. But there's one that we can't lose sight of is the jobs report. Imagine that we have like a surprise beat again, like higher job numbers, lower unemployment rate, and then that spike could take us all the way up to 4.5. Why not? The market is on edge, I think, and going into the elections, the market will continue to be on edge. So it's a bit tough to counter trade. But as I also said, I think there may be a lot of this move done already before the elections, and then we will have to see really if there is any counter move after that.
Yeah, I think you're right with that. I think maybe this week is going to be the last trading, like you say, before Thursday, Friday, NFP done, the ISM done. Then we could see a big shift around in trading. A lot of positions getting closed or squaring up, or maybe in some final election positioning going on, and then we're going to be really in wait and see mode next week to see what happens with that election and what's going to happen. Right, last one I'll look at before I ping it over to Mr. K. I'm sure he's going to have a look at it as well, but not that there's an awful lot going on in it at the moment. Is good old gold. My usual rules are still in play here. Just seeing where the levels are going to be developing. We had this 2740 that's become a bit washed out. I'm not ready to just pull it just yet, but I might be close to pulling it as a level I need to focus on. 27.48.49 may become the new level for that. That was the prior high. We tried holding it. We broke below, we've held below it again, so didn't quite get up today to test it. We're pretty much sort of mid-range at the moment, so you know, we're in that situation again, a bit like the price action we've had over here, where you make these highs and then we're a bit undecided, try a bit of downside, flat around the middle for a while, have a little poke below, that sort of thing. So really, if you're trading gold here, I'm still long, happy to stay long. I won't be worried unless we're busting under 26.85 and then 26.70. So you just got to wait and see what happens. Do we get another test up here? Do we hold it? Do we break it? If we just nick a new high, that keeps the momentum going, and then that potentially keeps sending us off. But for now, we might be in for a bit of range play. And you'll need to keep an eye on that demand news. Okay, it's only China for the moment, but if that starts spreading to a lot of other gold using countries, then we might have a bit more significant top in gold. If those sellers, jewelry makers and the whatnot, aren't buying gold because the price is too high, that's potentially a big part of the market disappearing out of the main market. Right, mate, going to ping it over to you for a couple.
All righty.
There you go.
Make Brian happy, huh? Let's keep Brian happy. Cable. We're still in the same kind of scenario in cable with the budget coming up this week. It's probably going to move quite a bit after that. But if you look at the more medium term, cable is still in a actually, I would argue it's still in an upward channel here. We did, as I already mentioned a couple of times, we did try below, but we did hold the 129 significantly enough. All right. Now I'd look at the other side, 130 the figure, 130, 15, 20 or so. That would be perhaps the first sign that cable has a bit more elasticity, I would say, and move back up. But it's not a done thing, and it's a bit strange because the euro sterling, as we see, I'll show in a minute, is actually keeping very, very rangy. So cable and the euro dollar are moving very much in tandem, which tells me that the market perhaps trying to price something in for the budget, but so far it hasn't been a disaster anticipation as of yet. Okay, so I think really for this week we're going to have to look at low 129s or what happens 130 15 or so for a starter in the cable, and that's going to drive it. I thought the market would have been a bit more on the defensive for sterling, but it still does show a little bit of bias on dips, or it still is not giving in the sterling, right? I want to show the Kiwi. So we had this interview with Oregon over weekend. We had bit of weakness on the back of, well, the dollar showing strength, which is now starting to turn a little bit. I did tell you about this 60-75 zone the other day, right? So I did buy a few just around this level. We did have a bit of a break. Now we're trying to get back above. I think this is still going to be interesting enough. So, but if we break below what we've seen as an Asian low earlier today, then perhaps we are seeing this a bit lower. I do think though that at least in the short term, we may see a little bit of a bounce here, which should take us back into the 60s on the Kiwi. That's how I'm looking at it right now. Elsewhere, still we are still trying here. You know, I told you about this 11.10 on the dollar Norway. We are still trying. Okay, it's still going up. We still see a bit of weakness again now in oil, and Brent is trading back lower versus what we had on Friday. That is, and the Norwegian kroner is still responsive to it. But I still say watch out about of this 11.10 anything 11.10, 11.15, keep a close eye on if we could find the top there on the dollar Norway. And that is really all I'm kind of looking at. I am looking at the dollar yen, but already Ryan showed it. I think this 112 and just below we also find moving averages. I think it's an interesting enough zone to keep an eye on. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Yeah, we'll call that a session. Just to get us set up for the week. See what happens the rest of the day. Have a great day, everybody. Have a great week. And we'll see you all tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.